Hey guys, and welcome back to the channel. And today we are going to be doing one of the things that we enjoy doing, or especially you guys do as well, and that is breaking down every single stock I brought in June 2026, and more importantly, kind of why I brought them as well. This series each month is about realistic investing, small, consistent buys that anyone can follow. No hype, no gambling, just building wealth slowly. And I do mention no gambling because we have got some speculative plays in my portfolio. But I do research, I do have a look at what they are and what the projects are for them. So I'm not just randomly picking the stocks just for the sake of it. I actually have gone and had a look at what they do. So let's get into it. Now, first of all, if you want to get some free shares, then go and hit the description down below. You can go on Robinhood and you can get worth up to $175 worth of stock. And the same as well on Trading 212. Also, first up is the sell of the month. Well, technically, wasn't really a sell. I moved 48.8 shares worth of about £1,000 of Carnival to Trading 212 from eToro. So there was no gains, there was just no fees, it was just a portfolio move. Carnival was a turnaround play, which I am actively loving to build my position even more. I want to try and get to about 100 shares, but right now it has gone upwards. So it's not really in a position for me to buy at the price I do want to buy at. But yeah, so no sales, no gains. It's just a portfolio move to trade 212. Now, first up is the S&P 500 ETF or FUSA. It's a simple low-cost ETF for anybody who doesn't know. It tracks the S&P 500, which is the biggest of 500 US companies. Now, it's in my pie of the £2 daily challenge because its long-term stability and diversification it averagely grows about 10% a year. So I'm doing this challenge where we're putting into a pie with another stock, which we'll get into in a moment, and see how it grows over time with small little investments each time. Now, you might be wondering, oh, if you're saying it's £2 a day, why does it say you've only done £10 this month? Well, at the minute, it's just a bonus cash investment things. So not everybody has £2 a day to invest in. So that's why I'm kind of using it like as what people would do. Oh, I've got some spare cash lying around. I'll put it in. I do £2 a week or something, or £5 a week, etc., etc. So that is why we have done that. So I put £5 a week in at the moment with the pie. That means it's £10 in one stock, which is the ETF, and £10 in the other, but it's a 50-50 split in the pie. So as you can see, we did buy £10, which was worth 0.117 shares. That means we've got a total of 0.37 shares, which is about £54-£59 invested, but the value is actually up at £56.94, which is very good because it's the backbone of the pie, and you want it to compound quietly. It's not a dividend like income stock where you go, wow, that's a lot of dividends coming through. It's a small dividend payer. So that's why I added with it was Main Street Capital. So in the pie, we do have FUSA and Main Street Capital. So Main Street is the income side of it. For anybody who doesn't know what Main Street Capital is, it's a business development company. It lends to small and mid-sized US businesses. The reason why I've added it into pie is because it's monthly dividends, strong long-term track record with it. And once again, as you see, we had £10 invested into it, which was 0.25 shares. It means we've now got over 1.3 shares invested with, total invested £54-£57. Now it's a little bit different because of the FX fee, but Main Street Capital is actually down quite a bit. I think it's down by like 4 or 5%. So the total value is actually at £52.89. But that's fine because you're buying the dips, you're buying more shares when it gets lower, which means you get more income because you're buying more shares. And it's the income engine for the pie. So, the price tips don't bother me. I'm here for the consistent payouts and here to grow the pie over the long term. And the next one is Games Workshop, the company behind Warhammer, or Miniatures Lore, or the video games that you might know. Now, the reason why I invest into it, it's a good company. It's got an insanely loyal fan base with high margins and a global brand. So I added £15 to it, which was 0.06 shares. I actually had a little bit of shares already, which I forgot to mention last month because it was so small a position. But it's got a total invested now at £19.40. It's got a total value now at £20.10 with a total shares of 0.09. So nearly at 0.01 shares, so nearly there. But we will probably keep adding to Games Workshop. It is on a rally at the minute, so it's not really a price for me to add. But I do like it when it comes down at a little bit of a discount because, I like it when you get that. I don't really like paying for the full price, but at the same time, I don't mind it because if I do pay at full price, I know this company is very good and this company will keep on growing. So I don't really mind if I have to pay a premium. Another one is waste management. So this is another one for me. This one's also in a pie. It's just in a different pie, just so whatever I got left over, I will add to it. It is the largest waste recycling company in North America. It's quite recession proof, and its earnings and revenue are pretty much guaranteed. If you look on their earnings sheet, you can see about 75% of their earnings is already notable before even the year starts because they're a waste management company. They do your waste. That ain't going to change. Unless, of course, there's a riot or something, then, of course, that you won't be able to get your rubbish sorted. But this is a strong cash flow stock, and this is why I've added it into my portfolio. Now, it's a small position. It's £5 total amount invested this month, and 0.02 shares. In total, we have 0.03 shares with invested of £6.49. It's only up by a penny. Like I say, it's a small position. It's just another pie that I just put my extra cash into with a lot of other stocks like Legal and General stuff that we will get into in a mo. So this one's really going to take some time to keep growing, but I'm not really fussed. It's for the long term. If I get more money or I'll win some in terms of a promotion or something, then of course more will go into this part of the portfolio. Legal and General. So this is a UK insurance pension asset management giant. It's got reliable dividends and stable UK exposure. So I did invest £7.50 into it this month with 2.6 shares coming out of that investment. Total shares is 3.4 with a total invested of £9.69, but the total value is at £9.90. It's a slow burner, but it's cheap, it's steady, and it pays you to wait. And it's a great company to definitely add to a portfolio. I've done videos on this. If you want to go and check these out, there are links in the description. Or if you can't find the links because you don't want to go in the description, you'll probably find them on my YouTube channel. Next one is Monster Energy. Now, this one is one that I've actually kind of grew to love, especially researching and looking into the fundamentals and their earnings and all that. This is a good global energy drink brand. Now, for me, the reason why I added it was high growth, strong brand, expanding internationally. So why wouldn't you add a stock that's doing all that? So I did add £7.50, which was 0.1 shares. We've got a total of 0.13 shares, no total invested of £9.74, with a total value of £10.16. This one's also in the pie with Legal and General and Waste Management, so all the spare cash will get split down. That's why they are small amounts. But like I said at the start, not so many people have much money to invest. So I'm kind of just showing you guys what it could be like just investing these small amounts into companies like this, and is it really worth it? Number one in the pie is Tesco's. Now, I did buy 3.2 shares of that with a total amount of £15. Now, the reason why I did add this was it's the UK's largest supermarket chain. I shop there myself, so I kind of know if it's good or bad because you kind of tell whether people are shopping. And a lot of people are normally in Tesco's because I'm having to queue for ages in my local one. But also because of that, they have got a good balance sheet. Fundamentals are strong. The defensive retail with strong cash generation and dividends. So we've got total shares of 0.2 with a total investment of £19.40 with total value of £19.50. So it's only up by 10p, but it's still good. It's a reliable anchor in that little part of the pie, and especially part of my portfolio. Next up is Robinhood Markets. Now, at the time of recording this, there is hopefully supposed to be an announcement, or it's supposed to be really good. According to Twitter, that Robinhood are due to announce something which might boost the stock up quite good, which I'm hoping for. But I've added another 0.7 shares at £48.62. Total shares is got now one nice little one share. That means total invested is now £67.62 and the total value is at £69.67. Now, the reason why it's a high risk growth play with improved fundamentals, but I also think it's going to be one of the biggest like investment platforms to go to later on in the future. I think they're doing a really good job, and I think they're going to keep doing it, especially with crypto and all that. I think this is a definitely one to go to. Now, I don't actually use Robinhood myself. I just use Trade 212 just for the Pies features and etc. And other features, of course, on it. But I know a lot of people myself that I know do enjoy Robinhood and for what they do. So it's definitely something that's really good to look at. The business is maturing. It's a small position with big potential, but just be careful because Robinhood is volatile. So you need to make sure with every single stock that I've mentioned, just do your own research before having a look into investing into them. Next one is a big one that I'm falling in love with, and that is Amazon. It's an e-commerce giant with AWS cloud advertising. It's a global titan in this space. Now, the reason why it's doing so well is because it's a retail scale with AI expansion. So I added £122 to it, which was 0.69 shares. So of course the total shares is now 0.69. Now it is down a little bit at the time of in this video. So I invested £122. Total value is £119. But it's one of those companies where you just want to own long term. It's simple as that. For what they're doing and for what the future plans are, I just can't see Amazon failing at it. And another one that has gone super hyperdrive in my portfolio, that is Dutch Bros. It's a US drive-through coffee chain expanded rapidly. It's high growth with cult following with strong store economics. Now I bought £10 of total shares in June. Now I also had some shares before that, and it was 0.2 shares it got me, with total shares of 0.35. Now I had total invested of £14.98. It's just below the £18 mark in value, but it's actually up by like 30%. Now, of course, 100. I put that in equivalent. £100 that would have been 30 quid profit or unrealized gains. For me, this is really good. I'm still going to keep it. I'm still going to probably add more when it dips a little bit because it's a good portfolio addition because I think it's going to expand really well, especially in America. What it's doing, I think it could rival Starbucks, and that's why I'm adding to it. It's going to add more stores. Hopefully, it'll grow even more, and hopefully, we see it internationally. So that's what I'm going to look out for. But like I say, it absolutely popped this month, and it's probably going to be one of the best performers in my portfolio. But we'll see when we get there. So another one that I added this month was Big Yellow Group, and I did add last month a share, so we're going to add another one again. So we added it at £8.35 that I put into it. Now it means I've got two total shares with £16.73 invested. And it's actually up to £18.36. Now it is a UK self-storage company with steady demand, inflation-linked pricing and strong capacity. So self-storage is one of the most sneaky good business models. And for me, I do think Big Yellow Group is solid. I think it's definitely one to look at, especially undervalued as well. It was sold off quite a bit, so there is some value there that I thought. And I did some research, and I definitely can confirm that myself. But of course, some people might have different opinions, so please, like I say, do your own research. But for me, I think this is a good one to invest in and add to your portfolio, and that's why I did it because I believe in stocks like this that they can do a turnaround play. They can, they don't believe to be down at the far they are. So that's why I added it because that's what I believe. I believe it's worth investing in. But like I say, a lot of other people have different opinions. So like I say, please do your own research. Just because I've added it to my portfolio does not mean you need to add it to yours because it might not fit your investing style. And I can't legally tell you what to add. But like I say, you need to do your own research. Just do it yourself. And it's just good to do it because at least you know what you're investing in. Especially when I invested in Sweet Green. Now, Sweet Green is a kind of like a meme stock at the minute. I say meme stock; it's got a lot of hype on Twitter, and it's a US healthy fast casual restaurant chain. It's down. I think it was at $30 trade, and it's now down at like $8 a share. So it's gone down really badly. Now, is it a high growth, strong brand expanded digital ordering service with healthy foods? Now, the growth has slowed down a little bit. That's why it's getting a lot of hype on Twitter because they invested into it because I think it's going to do a nice little turnaround play. And they added this new product with wraps and all that. It's like a $15 wrap, and everyone is going balmy about it. But the problem is, it's still early on in terms of the growth story turnaround play. It is risky, but it's interesting to see. So I invested £39.94 of my own money. Of course, I actually put 40 quid in, but with the FX fee, that's what it comes out as. So I got 6.24 shares. The value is actually at £42.74. And I'll probably sell this at the $13 mark, $14 mark when I get a little bit of profit, because I think that's probably where my limit will be with this stock. So it's going to be a little like turnaround play bet for me. I say bet, that's the wrong word really to do. I calculated risk, I think. So at $13, $14, I think that's where it's reasonably priced. So that's where I probably will take profit off Sweet Green. But like I say, it's an interesting play. I do like the stock, and I think the way it's going, and I believe they can do it, like not like other people on Twitter and like Reddit and all that, especially on their Yahoo and all that on the finance people are beating this stock down. But I think it can do well. I think it can, so it's something that you need to look out for. Next one is Microsoft. Now this is a completely new addition. It is down massively. It's near its 52-week lows, and why not invest in Microsoft? Because it is a stock that is ultimately worth investing in when it's at this price. It's at a 52-week low. Why not take a bargain? Now, Microsoft is well known for Xbox services, and well, that's what I used to know it as, just an Xbox maker. It used to make Xbox consoles, but now it's grown and grown and grown into a cloud, Office, Windows, like I say, gaming, AI, and global tech leader. Its AI leadership is the reason why it's growing with recurring revenue and its cloud dominance. And with that, I just think it can grow back from its 52 weeks lows and getting back to its all-time highs. So I added £100 to it, which is 0.34 shares. At the minute, it's down a little bit at £99.72. But Microsoft is one of the strongest companies on earth. And why not get it at its 52-week low? That's just my opinion. So I think it can still go a little bit lower than what it is, but I do think it's worth investing at these prices. And it's definitely something to look out for as well. Now going on to the Cashback investment portfolio. So this is where I use my 22-1 card and I get any cash back from it or any spare change. And at the moment, it looked like I was doing quite well. And I actually did quite well because on the holiday, I spent a little bit on my Trading 212 card. And we got a total amount of £6.28 into Rocket Lab, which was 0.09 shares. That means that now we've got 0.22 shares with £15.79 invested, and their total value is at £17.31. Now, it's a space launch satellite service company. It's a high-risk innovational play with real revenue growth chance. Now, Rocket Lab is speculative, but I like having a tiny slice of spec tech in my portfolio. And another one that has been beating me down in my portfolio lately, but it's in my cashback, so it's only spare cash that's going to go into from the card purchases, and that's just Helium 1 Global. So, an explorational company trying to commercialize helium reserves. Now, this is pure speculation, it's extremely high risk, but I have done my own research. Now, of course, it's at £3.14 with 628 shares brought, which means we got a total of 2,632 shares. Now, total investment is £15.14 with total value of £12.37. It's down nearly 30%. But like I say, it is a spare cash position from the cashback. It is in my cashback portfolio. So whatever I spend is just going to go in there like Rocket Lab and, of course, JEPI. Now, I've also invested JEPI on my actual stock and share ISA as well. So that's why it looks like a little bit more invested than what the Helium and Rocket was, because I've invested quite a bit in my stock and share ISA. We've in total invested of £18.28. So we now got 0.99 shares. Now across the board, that means we've got total shares of 2, and we've got total invested of £52.43, but the value is down at 50.21. It's an income focused ETF for anybody who doesn't know. Using covered calls, it's a monthly incomer, with lower volatility. It's great for smoothing out the portfolio and adding income. Now, I did do a video on this, link in the description, or like I say, go on the YouTube channel and you'll find it, and go into a little bit more detail of what this stock is. And next one, of course, is JEPQ. I invested £12 into it on a stock and share ISA, 0.583195152 shares. Now total amount was 12. That means, like I say, we got the total invested is £12. It's a new position, and it's £11.68. Same as Jeppy, but it's a Nasdaq focused ETF with the income growth with tech exposure. So that is why it's in there. And like mentioned, Dutch Bros was my highest performer in the all time. So this is not just my month position, like performance. This is an all-time performance. So all-time right now, my best stock is Dutch Bros at 28.39%. And as mentioned, is Helium. Actually, minus 18.3. I got that a little bit wrong. Minus 18%. I knew it was down quite a bit, but I didn't realize it wasn't actually bad as I thought it was. But like I say, Helium 1's at the bottom spot. But that is to be expected. It is going to be high volatility, and it's going to go up and down quite massively. So I don't mind with that one bit. Of course, trading 212 ISA return. So we got over £1,663 in it. Now, like I say, I did move £1,000 of that into trading 212 with the Carnival position. Now, the rate of return is 44.5%. That includes the cash and net deposits. But year to date, we're actually up by £85.86. With the invest in cashback, as you can see, we've got total £55.49. Total return is £1.14, and the rate of return is 4.3%. As you can see, we've got 0.71 cashback this month, but of course, every time I did a transaction, I got 50p of spare change. So, for example, if I spent £1.50, it'd be 50p. If I spent £1.10, I'll get 80p spare change. So all the time, I've got £20.75 in my cashback. Now, of course, this is the best part where everyone is wondering what we got, and that is dividends. In total, we got £5.71. We got our last ever dividend in UPS because unfortunately I am selling it in the next few weeks. I've already sold most of it already, but I am going to start selling it completely. Yeah, it's £5.13. I'm kind of just going to accept the loss. I just don't think it's a one that's worth risking, but I am still debating on that. So we've got £5.13 of that. Jeppy, we've got 0.15. Now, of course, we've got Main with 0.24 plus 0.18. And Waste Management, we got a penny, which was £5.71 in total. UPS carried the month with a chunky dividend, which is all good. Now, cash interest, so we've got 0.37 pence from the invest cash interest, and from the ISA, we got 0.04. Which is fine. It's small amounts. It's a little bit bonus when I have cash in there when it's waiting to be invested in auto invest into pies. So that is fine for me. If anybody's wondering what I use Stock Events. I'm not sponsored by them, but I'm just saying it's a really good app to use. They've just gone through an update, and I think it's still worth using. That's Stock Events, and of course I use it for my dividend tracker as well. So there we go. So it's the total buys of £588.26. I'm not going to include the total sales because to me it wasn't a sell. It was just a portfolio transition. I didn't lose any money. I just moved it to a new app. And if you want to copy the pie, the link is down in the description. And if you want to do the same thing as I did, then of course you can do. Then of course it's the reason why I started the pie. You can pause it because I have gone on to explain this in another video. But if you want to read this, you can. And that is it. So I hope you guys did enjoy. And if you want to keep enjoying these monthly updates, of course, leave a like, hit the subscribe button, comment down below if there's any stocks that you have in your portfolio that I have. But I hope you guys enjoy, and I'll see you on the next one. Goodbye.